How low do you think we could see Bitcoin go?
Yeah, so Bitcoin really, so one of the first things to note here is that Bitcoin for the last 10 days prior to yesterday was basically trading sideways, and that was while the dollar was going up, which is very unusual. But the dollar spiking yesterday in the overnight last night, it was finally kind of the straw that broke the camel's back, and finally it broke that 19.5 level, which is the 2017 high. So if I zoom out here, you can see that's this previous cycle high back in 2017. So once that happened, there were a bunch of stops that got run and it kind of pushed Bitcoin even lower. Today, we're seeing the dollar pull back, so it's bouncing, but it's a tough scenario for Bitcoin here. And I do think it's going to ultimately go lower. Doesn't mean if the dollar pulls back a little bit more, it won't have a small bounce. But I'm hard pressed to find a scenario where Bitcoin doesn't at least go to 12 to 13,000 before putting in a bottom. And I have a worst case scenario that's well below 10,000 on Bitcoin. So I think it's important for Bitcoin investors to realize that this is the first bear cycle that the Fed is not printing money during, right? And so you have to take that into account when you're doing your cycle. So if previous cycles saw an 80 to 85% correction, you got to think this one would at least do 80 to 85%, which would be 12, 13,000, and it might even do more. Yeah, so I think overall it's a negative, right? Anytime you have this potential geopolitical scenario, especially after Russia invaded Ukraine, it just opens a possibility that it could happen with Taiwan. It definitely puts people on the back burner. Now, the key is this market has been going up and down inversely to the US dollar. And we know that the more geo instability, the more upside on the dollar, right? More people hide in the US dollar for safety. And so that, again, just right there is a negative for equity markets, for crypto markets, for gold. Nicely enough, we have potentially seen a major reversal in the dollar today. So we might be seeing a short-term top there, which would be positive for risk assets.
The interest rate hikes that we've seen as well really contribute to making the US dollar that much more attractive to foreign investors.
I think it does to some extent. Yeah, I do think, Tom, it does because what you're seeing is essentially is the Fed is trying to lead this push and they're talking so aggressively hawkish. Now, I believe it's a lot of talk. I'm curious once we tick into recession, how quickly they back off from this hawkish talk. But I think they're trying to talk a tough game to make sure that inflation kind of stalls out here and does come in. But I do think raising rates sucks money out of the system, right? So just like printing and lowering rates drives money into the system, it makes money free or at least cheap. The opposite is occurring. So it's a supply-demand economics problem where when you take dollars out of the system, inevitably the dollar should strengthen. And especially since we're acting more aggressively than the ECB or the Japanese central bank, it's going to strengthen the dollar against those currencies.
I'd like to...
Sorry, I was just going to say something. If I could just show a chart here for you guys, because I actually think that, we just talked about, I just mentioned Japan, and I actually have a chart that dictates that I think we have a short-term high on the US dollar yen chart. And I think it's really helpful to take a look at. So let's take a look at this. Take a look at this channel. So this, again, beautiful trend line from this high going back to 2022. Early 2022 here, and look at the yen, what it just did today and how it's reversing. So these are the things that as a technician, I kind of watch for. And this, by the way, this doesn't mean that the yen is all of a sudden going to be strong and just continue to rally against the dollar. But what it tells me is in the short term, the dollar may be topping out and due for a pullback. So again, if you're looking over the next couple of weeks, I would expect further dollar weakness. And then this chart should come in and pull back, maybe down to this lower level. We'll have to watch and see. But those are just some cool stuff I love looking at.
Does the bond market believe how hawkish the comments from Jay Powell were from Jackson Hole?
No, for sure they don't. They don't. The bond market, and again, bond market is the biggest market out there, known as the smartest money. And interestingly enough, we've been seeing, and this is something I noted after Jackson Hole, the stock market freaked out, right? Everyone's like, oh my goodness, Jerome Powell's so ridiculously hawkish. And then what do? I go to the facts. I go to the charts, right? So what I did was I said, okay, well, if he's super hawkish, the most he's ever been, shouldn't the 10-year yield be making new highs? And the answer is I went to the chart and I'm like, wait a minute, he made these comments over here and we've gone up a little bit since then, but you're not even back to the June highs of 3.5% on the 10-year. So to me, that tells me that smart money is saying, hey, Jerome Powell, the economy is going to weaken enough over the next few months where you're not going to hike as much as everyone's anticipating. And therefore, the 10-year, at least as of now, is telling us that it has not made a new high. It is calling the bluff of Jerome Powell.
Or do you see the Fed kind of backing away from further rate hikes towards the end of this year?
I do. I really do. I mean, I have it penciled in for a 50 basis point at the end of September hike. So again, for me, now there's a lot of talk and the markets are even saying it could be 75 basis points. I'm thinking the Fed is, at least I hope they're smart enough to understand that they can't, and it's very dangerous to continue aggressively hiking rates. Because again, each rate hike takes a certain amount of time to work its way through the economy, right? Mm-hmm. So if you hike 3 times in a row, 75 basis points, and then all of a sudden in 6 months, we're in a deep recession, ask yourself, how do we get out of that recession? Because every past recession, the Fed has come to the market's rescue. QE, QE1, QE2, QE2. And I mean, you just went on and on all the way through COVID with printing money and lowering rates. And so the Fed can't do that anymore with inflation as high as it is. So I really hope they're careful. I think that they're starting to see those signs of weakness creeping in like they want, the inflation numbers coming down. And I think that that would be the goal here, to start that. They can always do 50 again later in the year if they want to, but starting to just bring it down a notch would be a very confidence boosting thing for the economy and for the markets. They may still do another 50 at the next meeting, maybe 25, whatever it is, but they're starting to kind of come down the mountaintop, this way at that point. And I think in the near term, that is a positive for risk assets. My thinking of, and why I'm net longer term bearish, is that I do see us going into a recession. Even if they start kind of coming down on the hikes less and less, we're still headed into a full-fledged recession. And again, I think once the market realizes the Fed can't bail us out of this recession, the market's going to freak out. It's going to say, okay, this could be a long, drawn-out recession, making up for all the lack of recessions that we've seen over the past 10 plus years. And that could be this kind of stagflationary kind of period in the markets. And I think that's the culprit for the next big leg down that takes us down to the pre-COVID low highs from 2020 and even below. Yeah, so definitely something I paid attention to, because I think it's like that first showcase that governments are going to be very aware of economic hardships. And so, everyone says that, the Fed can't print. And I've even said that to you, that it's going to be tough for the Fed to print when inflation is still elevated. But I do think that there is a point. I mean, there will be a tipping of the scale where if things get bad enough, even if inflation's at 4%, the Federal Reserve will start to print again. I mean, imagine inflation's at 4%, but unemployment's at 15%, right? You can't tell me that the Fed's not going to try to stimulate, that the government and the politicians that are trying to get reelected are not going to try to stimulate. They will absolutely. So there's this point where things will get so bad, they will start to print again. And that's where gold becomes key. I mean, so many of these metals and inflationary things, like even Bitcoin at a certain point, becomes a no-brainer. And I think South Korea was just kind of that shot across the bow. It wasn't any major intervention. It just shows the willingness for governments to step in when things get rough.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video. Link is in the description. Thank you.